Hello, welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of GBP JPY British Pound Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis, and do check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the chart of GBP JPY British Pound Japanese Yen, and as you can see, I'm in the 4 hours time frame. Then you can see that I have got three lines here on the chart. Okay, so at first let's do the analysis. Okay, so this line on the downside, okay, this is the support. This is support. 153.76 is the support on the chart, and you can see that we have got 156.00, 156.00 as the resistance on the upside. Okay, so these two are the main crucial levels on the GBP JPY chart as of now. So if we look at the overall chart, okay, if you look at the overall chart, or if we look at the overall chart, then we can easily see that overall the trend of the market is towards the upside. Market is an uptrend, means that market is bullish. But if I tell you, okay, but if I tell you to just look at this particular portion, the market from 10th May, okay, this market is from 10th May till 10th, okay, 10th May to 27th May. So if I tell you to just look at the market from 10th May to 27th May, you can easily see that market was dull, market was flat. There was not much movement in the market. Volatility was very low. As we all know, that market always move from higher volatility to lower volatility. I have also already mentioned in my previous videos. Okay, whenever there is low volatility in the market, then be aware that that market will be volatile. Okay, market always move from higher volatility to lower volatility, and lower volatility to higher volatility. Whenever market is flat like this, then you must be prepared for a big move. See, market move greatly, and whenever there is a big move in the market, then be prepared for the market to become less volatile. Okay, whenever market moves or gives a big breakout, okay, then immediately market comes down, or market starts trading in a range. Okay, because it starts taking rest. Okay, so this is the concept of volatility. Market always move from higher volatility to lower volatility, then lower volatility to higher volatility. Hopefully I have made the point clear. Okay, anyways, after the market made a big move, okay, and then again market, okay, and then again market start taking rest, and right now we can see that again market is not having much movement, or rather I would say that the movement is not that convincing. Okay, because see, market is going up, okay, it is standing at a resistance but still not coming down, so things are not very good. Okay, things are very lazy. Okay, so if you ask me personally, okay, Avilash, what you are doing, then I was just avoiding GBP JPY. The chart is good, the things are very well, but when there is no movement in the market, when there is no proper volatility in the market, then there is no money in the market. If there is no money in the market, then there is no use of trading. Anyways, let's switch to the analysis part. Okay, so right now we can see that, okay, market is trading below the 50 moving average, which was acting as a support to the market kind of. Okay, but overall things are not very good. Okay, overall there is not much movement in the market. Okay, and if I take you to the weekly chart, this is the weekly chart, and if you have watched my previous videos, then hopefully you remember how much I focus on this particular price level. Because when market was very much bullish, I told you that at this particular price level market will face some resistance, and market will face some difficulty in going up. And as expected, or as per expectation, market got the resistance, market faced the difficulty, and market started facing some selling pressure. As a result, we got to see a red candle this week. Okay, overall the market is very bullish, there is no doubt about it. Okay, overall the trend is very up. But as of now, there is some volatility issue going on in the market, or I'll say that there is not much movement. Okay. Then what should be a strategy? Okay. Our strategy is simple. Okay. As the market is very dull right now, okay, still the best trading opportunity in this market is this level, 153.76 level, because if market is in uptrend, then as always in an uptrend market, the best trading opportunity always lies near the support. Okay, and here we can see that this level is acting as a support to the market. Previously it was 50 moving average, but 50 moving average is not a valid support right now. So the best trading opportunity or best trading spot in this market is this level, 153.75. 153.75. So in case market comes down to this particular price level, then just observe the price. If you see that market is respecting this level as a valid support, market is still respecting this as a support, and market is about to bounce from here, then you can go for a buy order. No need to worry. Okay, you can easily go for a buy order. But yes, confirmation is always important, and you know it pretty well. Confirmation is always in the form of a price rejection from below, or a hammer, or a green candle. Once you get the confirmation that yes, price is being rejected from below, means bulls are present in the market, and you can go for a buy order. On the other hand, the second best trading opportunity in this trending market is if market crosses this level, 156.00, okay, or 156.01 level. Okay, if market crosses this level, this will be your second best trading opportunity, or the second safe trading opportunity, because when market will cross this level, okay, then this will be your new support. Okay, then this resistance will become your new support. Then this resistance will become your new support, and this will be your new next area of value, and you can go for a buy order. But remember, if market gives you a breakout, do not buy away right away. Okay, just wait for the confirmation. If you see a big breakout like the previous time on 20th May, then you can go for a buy order. Otherwise, if you see that market has crossed the resistance with small green candles, then do not buy. Do not buy at all. Do not buy. Wait for the market to trade above this level. Okay, wait for the market to trade above this level for at least 4 to 6 hours, and just try to read the chart, try to read the market emotion, try to understand the market psychology. If you see that after 4 to 6 hours market is trading comfortably, there is no price struggle, you can go for a buy order. Okay, but if you do not get a confirmation, do not buy. Okay, and if market reverses from this particular price level, then I'll say that it totally depends on you. Okay, because see, right now we can see that market is standing at a resistance, but still market is not coming down. Okay, there is, because there is not much selling pressure. Okay, there is not much selling pressure present in the market. So shorting the market is not a very wise decision, because see, because generally whenever market hits a resistance level, hitting a resistance level means sellers are present in the market and they are pushing the price downward. But here we can see that sellers are also not that strong, buyers are also not strong. Okay, so considering the overall trend of the market, do not short the market if possible. Okay, listen to me. Otherwise, or if you listen to me, then wait for this level or this level that I have just discussed a few seconds ago. Okay. Or wait for volatility. Now volatility is not there, so it means money is not there in the market. Okay, so hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my YouTube channel for regular market analysis. Thank you so much. All the best. Take care. See ya on Monday.